Hello everyone, and welcome to this tutorial on how to trade call options. Let's go ahead and jump right into the trade tab of the Thinkorswim platform, which is what we're going to primarily be using throughout this presentation. All right. When it comes to in the money options are going to be these guys up here, the one that's grayed out. Use that in the money. At the money will be this one right here, right? Pretty much at the price of the stock. All right. Out of the money will be anything below this line right here. Out of the money. Now, depending on what trading strategy you use, sometimes we use in the money stocks, in the money options, or even at the money options or out of the money options. It all depends on what strategy you utilize. These here are called the strike price, 104, 105, 106. We have a dollar wide strike price here. All right. Deltas are these guys right here. Deltas are also pretty important, right? What this number tells you is for every $1 increase in the price of the stock, your option will increase by this many deltas. It's about 107 strike price, your stock goes up, your option is going to go up by 75 cents, all right, and so on. Front month will be March 16, right here. Right, and go ahead and take time to understand the different layouts within this options chain. All right, take time to understand the information in here. Also, be aware of the bid and ask spread. All right, bid and ask spread, because if you're gonna buy a call at $1.46, $1.45, as soon as you buy it, you're gonna be down 3 cents or 2 cents. All right, so when you buy, you want to make sure that you make enough money to cover that bid and ask spread and also your transaction costs. All right. Open interest and volume. You want to make sure there's enough open interest and volume in what you want to trade. Make sure it's a very liquid asset. That way you can get in and get out of trade pretty quickly. All right, because there's a lot of people trading that option. Okay, so now that we have established a basic trading lingo, we've looked at in the money, at the money, etc. We've also somewhat developed our trading criteria, right? We're going to be looking at the bid and ask spread, the delta, make sure there's enough volume, etc. Talked about using stops. Let's take a look at the blank chart to see what sort of information it can give us. We see here it made a low, made a high at the end of the day. It's a candlestick chart. There's red bars, there's green bars. Okay, go up, go down at a certain point. And that's basically information we can see on there. All right. If we move on to a chart that has all the studies attached to it, all right, you can also always add and take away whatever studies you're comfortable with, to help enhance the information on that chart. All right. Here we see we can open the position at the point we think is a low point, and then we want to take profit up at the top when we think it meets some resistance up there. All right. Now this is the full day chart. This is showing you what happened throughout the day. Right. One might think, oh, why don't you just hold until it gets to a higher point and then sell up there? But you got to remember that when we initiate the position, we're not seeing where this thing is going to go. We're going to assume that it's going to go that high, but once again, that's a risk you're going to be taking if you're not going to use stops. If you're just gonna buy and hold and hope for the best, then maybe that's the strategy you want to use. But as a smart trader, we're not gonna employ such willy-nilly, haphazard, training. What we're gonna do is do something systematic. Precision trading is what we try to employ, right? So we have RSI, stochastics, MACD. Not any one of these is the best. They all have their great points, but it's up to you to decide which is the best one that you want to use that's going to help you, make the best decision. Before I place any trade, I like taking a look at the economic data. That way, I am aware of what's going on in the world around me. You don't want to trade in a vacuum. Okay, I like going to marketwatch.com because there it shows you what reports are about to come out and at what time they will be released. Okay, it also shows you actual median forecast and the previous results of those reports. MSNBC, they also like to discuss these reports, especially the major ones like the Fed is about to raise interest rates, or anything that can significantly impact your trade that day. You want to be aware of that. These could seriously jolt the market within 1 or 2 seconds of coming out. So you always want to make sure you take a look at the economic calendar on marketwatch.com. Secondly, I also like to take a look at FinViz. FinViz shows a wide range of information. You could go up to the top, and put in a specific company you're looking at, the profile, and it will show you a basic chart of that company. And when you scroll down a little bit more, you will see financial data that will help in your decision. Data like PE, price per share and stuff like that. Expected profits within the next 5 years, return on equity. And if you're making a long-term trade, you might want to know, what range these items fall into, and how profitable is the company? Is the company viable? Are they in good standings? You want to compare that to other companies and see how they stack up. So don't just buy a stock based on some tip someone gave you at the bar. It might end up being something that is not financially stable, or it's not gonna pan out the way you want it to. The bottom line is do your own due diligence, do your own research. And I have lost some money in the past by listening to other people, hence the reason why I came out with my own, did my own research, and I advise you to do the same thing as well. Capital preservation is a strategy for protecting the money you have available to invest. So if you have your capital and you invest that capital and you make a profit on it, you want to take that profit, add it to your capital, and reinvest that total amount, make more profit. All right? So at the forefront of every trader's mind should be capital preservation and proper money management. The screen you're looking at right now, gives a basic idea of how to employ such strategy for capital preservation. Right? You're not gonna just, buy the call at a certain point and then hope for the best and then walk away, with a whole bunch of money. In a perfect world, that would be great, but that's not how it works. Right? So right where it says that you're gonna buy 10 shares, 10 lots for $1.21 as a limit order. All right. And a couple minutes later, 5-10 minutes or whatever the time frame is, you say, okay, I'm gonna take profit when it gets to $2.12. All right, because that's what you think is gonna meet some resistance up there. Now, if you're totally wrong, on your analysis of this chart, and you say to yourself, all right, if it gets down to $1.05, I want to be out of the trade, I'll preserve my capital so I can reinvest in another trade and move on from this losing trade, right? As a trader, you need to understand that if you conduct your due diligence and you go into a trade, it's a winning trade, that's great. Everyone can deal with that. When it's a losing trade, you have to say, okay, accept your losses and move on. All right. So there's a lot of different stops available. Obviously, you can use a regular stop. You can use trailing stops. You can, stop to a certain percentage or a certain monetary value. Right. But we're not going to go into that advanced detail right now. Just understand that it's best to employ stops within your trading. Obviously, if you are you're comfortable with trading, you recognize where the stops are, you know how to get in and get out of the trade quickly enough, knowing where your support and resistance are, you can trade without the stops. Now let's review a live trade. By live, I mean utilizing the on-demand tool, Lingo platform. So first thing we want to do is establish our support and resistance area. We have a low down at 108. Then we want to set up, where you think the study is the range is gonna enter. Put some holes in there to highlight that. Go to the trade tab, try to select a strike price. We're gonna go with the 185 because that's only 2 cents wide. The bid and ask spread is 2 cents wide. You're gonna select about a 200 lot. All right, you could use more, you could use less, whatever your capital is. Okay, take a quick look at the charts here. All right, and this is all in real time. This is, there's no fast forward or slowing down at this point. This is the speed at which this actually moves here. All right. So we want to set up our low support and get down at the bottom to 108. All right. Choose a different color for that so we can recognize it pretty easily. Alright, this time I'm going to end the trade and watch everything head north so we can make some profit here. In the trade tab, we can monitor our position to see how much profit we have. So far, we have $600 profit. All right, let's go ahead and fast forward this process. This is actually in real time. It's about a 30-minute from start to finish with this trade. But I'm going to fast forward so we don't have to sit through 30 minutes of painful watching each candlestick develop. So the idea with the support and resistance here is if this candle closes below that 108, 187 line, I'm going to get out of the trade. All right. So I'm going to monitor this candle as developed. It's a 5-minute chart. I'm going to keep my eye on it. And if it closes anywhere below that, I'm going to exit this trade. All right. See, right now it's hovering around that 108.93 price level right there. Now we have some movement. Okay, let's see. Looks like it's taking off. And of course, with the support line, you could use today's or that day's lowest point as a support line, or you can also use the previous day's low as a support line. You know, whichever you're comfortable with. And right now we're up about 1600. Top of this candle might give us some resistance. Let's see where it goes. We might want to put a resistance drill line for resistance right there at that point. Let's go ahead and set one right here and keep an eye on it. Alright. If it gets to that point and turns back, then we could pretty much take our profit at that point as well. But at this point, we're pretty much playing with house money. All right. See, we 2,300 bucks, so pretty much playing with house money at this point. Keep an eye on it and see how far it goes. So same concept with the support line. We have a resistance line of 109.25. Sorry. If it closes below, if the candlestick closes below that line, and then I'll be inclined to take profit. If it closes above that line, then we'll see how high it can actually go from that point. Let's just see. It closed below that line. Let's just see if we can still hang on, because this MACD look like the momentum's about to swing to the upside here, and I might push it through above that 109.25. Let's take a look at it. You might see the doji right here at this point. Let's go ahead and put our finger on the trigger. All right, to see what action we can take here. All right. I want to look at my chart and have my finger on the trigger, so if this thing turns around at that point, I can easily exit this trade. Okay, it's 36, and that doji is still lingering, so let's just see what's gonna happen here. Okay, now we have solid movement above that resistance line, that 109.25 we initially drew there. So that kind of takes that line out of play for right now to the upside. of course, prior resistance becomes support. So on the downside, that may be a support on the downside. But today we're going to focus on the upside here. Okay, we're up $6,000 now in our position. Looking pretty good so far. Keep our finger on the trigger. Let's see how high this thing can go. Like I said, at this point we are way, in house money. We have a lot of profit right now. We can easily exit this position happily, but we're gonna, watch to see how much we can make out of this. Not to get too greedy, but we want to, get as most as we can safely out of this thing. Now 109.6 looks like a major resistance up there, so let's see how it gets to that point. Hits that. Oh, there's a new high. Okay, let's exit now and take profit. And our total profit is $7,800. Within a 30-minute time frame, we made $7,800, and that's as easy as it is done, right? And keep an eye on it. It's gonna go a little higher, maybe. Yeah, but I'm happy to have exited the position with profit. Whether it goes higher than this, it is of no consequence because I would have already exited the trade. Now let's do a quick recap of the information covered here today. As mentioned in the trade tab, we want to pay attention to in the money, time decay, strike price. Time decay is one you really got to watch out for because it tells you how much time you have left on your open position. We also discussed developing the trading criteria. Make sure you have very narrow bid and ask spread. Be aware that also you need to understand how many open interest and volume you have available to you. We didn't touch on implied volatility, but it's worth mentioning. There are different strategies involved with implied volatility, but that will be discussed in another video. We also mentioned using stop limits and trailing stops if you want to do some capital preservation. And then lastly, we also mentioned under trading criteria, be aware of the economic calendar world events. And watch the news. Go to mention marketwatch.com for the economic calendar. Then we took a look at the blank charts. We established the support and resistance areas so we know when to safely get in and get out of the trade, which is extremely important if you want to preserve your capital. Don't get too greedy. Take your profits and move on. Have your favorite set of studies in there to help enhance the information you see on that chart. And then lastly, we went through a live trade and on demand. On demand is a great tool within the Thinkorswim platform and it gives you a chance to practice trading with virtual money so that you can understand the ins and outs of actually putting on and taking off a trade. Thank you for watching and have a great day.